Hello, everybody. Come right on in. Carolyn Williams here. Whew, I made it. I scheduled this right at the time. I just got in from a walk, so I'm all sweaty. I'm glad you're not close to me, but I made it. I'm just a couple minutes late, but come on in. I want to give you a quick market update. So when you arrive, just post in the comments. Now, let me kind of share. I'm doing something a little bit different. I typically do this for the graduates of my 21 days to stock market investing class. We have a graduates forum. And when you take the 21 days to stock market investing class, you get 6 months in that group. And in that group, I'm coaching you the entire time and giving you updates and live lessons. But this week, because I'm getting ready to start a brand new class on Monday, this coming Monday, May 9th, I'm broadcasting this on my Money Reverse Facebook page, on my Money Reverse YouTube channel, in addition to the Graduates Forum Facebook group. So I'm just kind of sharing with you guys that we're here for Stock Savvy because we started talking a lot about inflation and the Fed. And so I'm just kind of following through so that you can also get some information. And also, if you have any questions about the upcoming class, this is the last week to register. We start on Monday. Now, if you're already registered for the class, just post in the comments that I'm registered. Now, one thing that I noticed yesterday when I did this is that if you were in the graduates forum, when you posted in the comments, I couldn't tell who you were. So if somebody that's watching this from the graduates forum, and you know who you are, these are the people that have completed my 21 days to stock market investing class, and you're in that super private, nobody knows about it, you can't find it, you can't search it out Facebook group. So if you're in there, just say, hey, Carolyn, okay. And see, I see somebody there, but you know what? I don't know who you are. And that's part of the software. That's a flaw that's in the software that I'm using. So those of you in the graduates forum, when you post, it just shows me Facebook user. So I don't know who you are. So if you can kind of tell me who you are, that would help me out. I apologize for that. Typically, when we're doing these, I don't use this software because I'm only broadcasting in your group only. Oh, yeah. Hey, Bishop. Oh, sorry. I want to say who you were. Hey, Bishop, it is so good. I love having Bishop here, everybody. Those of you that don't know me, my foundation for all of my teaching and what I do is based on Christian biblical principles. So I have a lot of kingdom folks up in here. And I love it. So we got bishops and pastors and elders and choir members and all kinds of folks. And we got more things in common than the stock market. So welcome, Bishop. He's in Houston, Texas. So with that, just want to let you know, you're around kingdom folks. If you've always wanted to learn stock market investing and want to hear it from a Christian biblical perspective, and with that, it's really, I'm not saying anything too differently than other analysts and other people are saying, but the way that I say it and the way that I explain it, and the fact that I'm not cursing and everything, and I'm using biblical principles in the way we do things. So if that's something that you're interested in, this is a good group to be in. So welcome. So those of you in the graduates forum, I won't know who you are. So with that, when you can still post and everything, but if I ask who said that, just know I'm not dumb. It just doesn't show me with this software. And that's what it does in groups, in Facebook groups. But those are my Money Reverse page. If you post, and if you're on my YouTube, you post, I know who you are. So that's great. Okay, welcome everybody. Did anybody see? Okay. Before I tell you guys what happened, I want to know who can tell me what happened. Who can tell me? Okay, so one thing, well, let me tell you what we all knew from yesterday's meeting. Today, was today that the FOMC, Federal Open Markets Committee meeting ended. And the meeting ends with two things. We already knew the Fed had told us they were going to take interest rates up, and this is in an effort to curb inflation, to kind of cut inflation down. It's at 8.5% overall when you look at it here in the US, the entire US. So it's going to end with an interest rate decision. They made a decision. And remember, the Fed makes decisions and they act on it. It doesn't have to be approved or voted on. Nobody has to. They are their own governors. That Fed, they don't have to have it approved by the president, by the government, by law. Nobody has to vote it in. What the Fed says, poof, they're like God in Genesis. Poof, and it happens. That's the way they do. So with that, we wait for them to have their meeting, and then they announce two things. They tell us, number one, what their decision was on interest rates, and number two, then there is a statement from the chairman of the Federal Reserve, which is Jerome Powell. The letter J, Powell is what most people call him. I affectionately call him Doom, for good reason. But did anybody hear what happened today? If anybody heard of what happened on anything related to the market today in terms of how it traded, what the Fed decision was, and what happened, just kind of post. I want to see who's been watching and who's just trying to binge watch here to find out what's happening. I want you to learn to watch the market. Once you have taken my class, you will know how to watch the market. So all my students, they know how to watch the market. So I guess I'm really talking to everybody. But for those that haven't taken the class, this is kind of what you'll learn, is how to watch the market. So anybody that has any information on what happened, go ahead and post it. I want to see what you guys heard, what you guys saw. And say hello in the comments when you arrive. Say hello so I know you're there. Okay. Let's see. I'm not seeing any comments yet. Hang on. Thirsty. Okay. Well, I'm not seeing any comments, so maybe nobody saw it. Maybe nobody saw nothing. Y'all ain't see nothing? Okay. Yeah, there we are. Yeah. He raised rates by 50 basis points. Yep, exactly. Bishop know what's going on. They sure did. Now, this 50 basis point, a basis point is 100%. So 50 basis points is 0.5%. Has this ever happened? Typically, when they make moves, they do it in 25 basis point increments. I don't know if this has happened. I don't think this has happened before. I think it's always been 25-point increments. So with that, this was an unprecedented approach to curbing inflation, but it's unprecedented in the way that they did it. But it's not unprecedented because of what they did, because it's taking so long. Inflation, typically, a very hawkish Fed would feel it coming and swoop in, whoop, and take those interest rates up fast. Hawkish is like, we are not letting this happen. So this is not a hawkish Fed at all. This Fed is very dovish, and you're going to see information about dove on tomorrow's Money Reverse Facebook page. So with that happened. Thank you, Bishop. That happened, and interest rates went up 50 points. Now, remember, when inflation is high, markets are going to trade down. When inflation is high, markets are going to trade down. So anything that is working to curb inflation is going to send markets up. Anything that looks like it's making inflation worse is going to send markets down. Okay. So guess what happened after this interest rate decision was made at 1 p.m. Central, which was 2 p.m. Eastern. And then from the Fed conversation with Jay Powell, 30 minutes later, 1:30 Central Time, which was 2:30 Eastern Time. What happened with the markets? Let me show you. Let me actually show you what happened. I had to show y'all. I got to show y'all. Let's do it. Take a look here. What I did, it's not Monday, May 4th. It's Wednesday. Today's Wednesday, right? Yeah. Today's Wednesday. It's Wednesday, May 4th, 2022. So take a look at the Dow. This is the 1-day chart. Take a look down here. You can see how the Dow was trending. Look right here at 2 p.m. This is Eastern time. 2 p.m. is when the interest rate decision came out. And then we started to see a little bit of rise, and then around 2:30, because this is 2 p.m. and then at the end is 4 p.m. So just assume right in the middle of these two numbers is 3 p.m. So you can see before 3 p.m., which was 2:30, was when Jay Powell started to talk. And look what happened to the Dow. It shot up. The Dow traded up right here at the top, 932 points, almost 1,000 points up. That's 2.81%. Okay, let's take a look at the next one. The S&P. Look, it's the exact same chart. Look at 2 p.m. You see it had a little dip there. You would think these are the exact same chart. And then right at around 2:30, it started trading up and it just shot up. Remember, this is all systemic, which means the entire system is responding to this. That's why I say if you have stocks that are down, don't be concerned about your stock being down unless you see some reason to be concerned after you do your stock research. So go back to your fundamentals on every stock that you own if it's dropping. And in this case, no news is good news. That means it's trading systemically, right? So here we go. The S&P was up 124 points, 2.99%, almost 3%. And then here is the NASDAQ, exact same chart after 2 o'clock. It just shot up and the NASDAQ was up 401 points, and that is 3.19%. So we definitely saw an increase in the market. Everything traded up. Did anybody make any money today? I did. Anybody make any money? Bishop, you make any money today? I made some money. I'm trying to see how much I made. I'm trying to find my book so I can tell you how much I made. I have to write it down. I make money in the market every day. I have to write it down. So today I sold 2 stocks and made, let's see, how much did I make today? Okay, today I made $569.70, all after 2 o'clock. I sold 2 stocks. I got 2 more I'm going to sell tomorrow. Probably bring about another 500. So my earnings are a little bit low now just because the market's been trading down, but I'm trading both bottom and up. So with that, how, and let me tell you something else that was said in Jay Powell's conversation. And if you have any questions throughout this, just post them in the comments. One thing that Jay Powell said in the conversation, he said, we definitely want to get on top of inflation. We definitely want to get inflation under control. The markets trade up. The whole time he was talking, the markets trade up, and that never happens. That's why he got the name Doom from me, is because that never happens. Typically, the more he talks, the more the market goes down. But they're on a trek to correct inflation, and anything that looks like it's correcting inflation or have the ability to put a curb to inflation is going to make the market respond very positively. He said that in the next meeting, the Fed meets again, the FOMC meets in June and July, and then October, I think. There's 5 more meetings for the end of the year. June, this is May, June, July, August, October, and December is when they meet. So he said for each of these meetings, he is going to raise interest rates by another 50 basis points. So that what that did is that kind of took away from the thought pattern that they were going to go more hawkish than that and go with the 75 basis point increase. And and what the Fed wants to do is not shock the markets. The Fed wants to not shock the markets. And I know we look at inflation and we say, yeah, we need to curb this inflation. We need to fix it. But remember, when they take interest rates up, that's a nebulous rate, the federal funds rate. It's just the rate that banks use to borrow money from each other in overnight lending. So it's not a rate that's directly affected to you or I, but that gives banks the leverage to charge higher rates for everything because they have to pay more to borrow than they have to pay more to loan. So it just sets the precedence for rates for everything to go up. It's good for banks. Your savings will start to pay more. But so will your mortgage payment, your mortgage rates. Mortgage rates will go up. Credit card rates will go up. Loan rates will go up. Things will go up. So it will make it harder for people to borrow money. And that's where we're trying to curb some of the spending, get some of the money out of circulation, which is one of the main reasons for inflation is that we just put so much money in the economy during that 2-year reflationary period. That's why there's so much inflation because everybody got money. Everybody got money. Every business got a PPP loan. Everybody got tax breaks. You got to pay your taxes later. It's like you got tax deductions. You got tax everything. Everybody had money because you didn't have to spend it on taxes. You didn't have to spend it on, when you were unemployed, you got extra unemployment money. So that went on for 2 years. So this is just a readjustment after that reflationary period. Completely understandable, but it is going to make it very hard for people that are trying to build businesses, that are trying to expand with construction, people that want to build houses, buy houses. Houses are high not only from the lumber and materials perspective, but also from an interest rate, from a mortgage perspective too. So it's going to be harder on consumers. And I see people whining and everything, but you know what? To everything there is a season. I believe that. To everything there is a season. If it's winter time, I'm going to put a coat on, a very cute coat, and I'm going to have my cute hat, and I'm going to have my matching gloves, and I'm going to be looking good, but I'm not going to be complaining that it's cold. I'm going to put the coat on and I'm going to enjoy the season. So that's what I want to encourage you to do too. So with that, when he said 50 basis points going forward, that took away some of the fear that people had that they were going to come back and just jerk these interest rates up in the coming months because inflation is probably going to continue to rise for a bit. Now, I do want you to know another major date, and that is a week from today. Today is the 4th, 11th. May 11th, Wednesday, May 11th. That is going to be the day that CPI numbers come out. CPI, Consumer Price Index, that is where we get the new updated inflation rate. And that is a lagging indicator, which means you're going to tell us about inflation in April. They're going to report it out in May, and it's going to be what inflation looked like from April 1st to April 30th. And then they're going to tally that up and say year over year from April 30th to, for a year ago, they're going to come back and tell us what the new inflation rate is. If that inflation rate is high, which it will be because nothing has changed until today. The announcement of federal funds rate changes came today. So when you look at April, inflation is going to be higher. It's going to be higher. So which means markets are going to trade down on that news. They're going to trade down. Every time we get CPI numbers and inflation is higher, markets are going to trade down. Every time we get consumer confidence numbers and they're worse, markets are going to trade down. So we're priming the pump now. It's like having a water pump. He's priming the pump now. Let's get some interest rate increases to get some of this money out of the economy so that things will start to be valued correctly. So next week, this time next Wednesday, we're going to see CPI numbers, and we'll see how the market trades with that. Now, any questions? Does anybody here have any questions on your next moves in the market, or anything that you're doing, or how can I help you during this time? How can I help you? Yeah, May 11th is when the CPI numbers come. We're now at 8.5%. 8.5%. I got a tracker here. I track all this stuff. Yeah, after that, it's June 10th that it comes out. The next FOMC meeting is June 14th and 15th. So they meet, the FOMC, the Fed meets in June, July, September, November, and December. So there's 5 more meetings before the end of the year, and they're going to take interest rates up 50 basis points each time. Now, any questions? I'm not seeing any questions posted. Let's see. I think I had a couple more things I want to show you. Let me just show you something real quick as I explain it. I wanted to explain to you what a hawk is. Now, a hawk, I posted this on the Money Reverse Facebook page today, and on Instagram and on Twitter, I think. So with that, when you hear, because you're going to hear these words, hawkish and dovish, you'll see a dove tomorrow. But what a hawk is, just like we have bull and bear markets, when it comes to the Fed, they're hawks and doves. And a hawk is a very aggressive approach to monetary policy. The hawkish response would be to take interest rates up 50 basis points back in December when they first started tapering. November. They started tapering asset purchases in October is when it was announced. And they said we would stop buying our own bonds from October all the way till March. A hawkish Fed would have said, let's raise interest rates now. We're not going to even let inflation get out of the gate. They would have just said, stop unemployment, raise interest rates, take taxes up, bam. They would have been very, very hawkish, very aggressive to their approach to monetary policy. So the hawkish, when you hear hawkish comments from members of the Fed, they're saying things like, take interest rates up faster, let's go faster, take them up higher, let's call an extra meeting. They're going to do things like that. They're going to have a very aggressive stance to monetary policy. So that's what a hawkish Fed is. So when you start to hear that in the news, you'll know what they're talking about. Now, know that this Fed group is not very hawkish at all. They're very dovish, which means they're very the opposite of a hawk. A dove is, oh, let's just let it ride. Let's make sure nothing is disturbed. We're going to address this. But what doves think is, let's keep interest rates low so that people will spend. And so that's going to stimulate the economy. So that's what a dove thinks. That's kind of what doves don't want to take interest rates up high, and they don't want to do it fast, and they don't want to do it quickly. So remember, to me, this feels late. This is a very this Fed group is very dovish, in my opinion. They're very, very cautious. They tell you 6 months ahead of time, we're going to take interest rates up. Everybody get ready. They don't want to shock the market. So this Fed group is very dovish. So they're not hawkish at all. So you'll start to hear some of the Fed presidents that are make very hawkish sentiments. But overall, this Fed group is not very hawkish at all. So with that, I want to also say, what am I doing in this time? I'm watching very closely. I am doing some opportunistic trading. I'm doing some trades just because it's volatile. The VIX was at, let's see, what's the VIX at? I'm not going to look at it right now, but The VIX is high. It's over 25. And every time it's over 25, I'm going to come in and answer your questions and be able to give you a market update. So let me know. I'm not seeing any questions. So I'm assuming that you don't have any questions. And if you do, you can post them here in the comments even after I am finished. Now, one last thing that I am going to give you time to post questions on. I'm going to tell you one last thing, and it is about my upcoming 21 Days of Stock Market Investing class. This is for people that have not taken the class. If you're watching this outside of the group that has taken the class, which means you're watching this on Money Reverse Facebook page or Money Reverse YouTube channel, then that means you probably have not taken the class. I do have a class that's coming up here pretty quickly. It's coming up on Monday, May 9th is when the next class starts. It is going to be an exciting class. If you have already registered for this course, and some of you have already registered, I got some people that are so excited. I'm excited too. I'm excited. It's good to teach. This is a good time to learn. This is a good time to learn because it's one of those times in which you need to know what's going on, know what you're going to do, and when it's time to do it. So this is a time to learn. This is not necessarily where you need to jump in anything tomorrow. If you are doing opportunistic trading, meaning you are trading just to make quick money, you're getting in something and getting out of it and then getting back in, that's what I'm doing. And that's what my group of traders are doing in the quick money trading group. We have weekly goals and we trade in the market every day with a goal of I make money in the market every day. That's my goal. Some days I don't. I typically trade about 3 days a week. 2 days a week I don't trade, working with clients, and I do have a client meeting coming up here very shortly. So let me get off here. But I do want to share with you. I hope that these sessions have helped you to see that this is not scary at all. This is not scary, and this is not difficult. If you've always wanted to learn stock market investing and trading, I hope that some of the stock savvy sessions and the things that you're seeing here help you to understand this is not difficult. You can do this. And I would love to be your coach, and I'd love to be your instructor to help you. Look at Bishop says, this is a must for anyone wanting to learn fundamental stock trading. Yeah, we start you from the beginning, from soup to nuts. We start you from the beginning. So if you want to be a part of this next course, and you can see it's coming up, it's live classes. I'm not going to put you out there with videos by yourself. You're going to be with me live, and the classes are live on Monday, May 9th, Monday, May 16th, and Monday, May 23rd. By Memorial Day, you'll be trading. You'll know what you're doing by Memorial Day of this year. So I'd love to have you join me. What I'm going to do is I'm going to put the link to register for the course in the comments there. So if you want to click that link and get more information, I would love to be your instructor for this. I would love to be your instructor. So let's see. I do have to, for whatever reason, it always tells me I need to try it again. So let's see if this time it posted. Yeah, it posted. Okay, good deal. So with that, any questions? Any questions from anybody? Now, those graduates of the 21 Days class on Sunday, not this Sunday, but the following Sunday, let me tell you what day that's going to be. This Sunday is Mother's Day. The following Sunday is the 15th. So we are going to have an advanced market training session. We're going to have an advanced market training session. Let me kind of tell you the topics. If you have topics that you want to have in the advanced graduates live training, let me know. What we're going to talk about is I'm going to give you a market update, give you an update on what's going on in the market and what sectors, because I want you to know what sectors are doing. The most beat up sectors, the sectors that have been trading down the most, during this pullback are the ones that's going to recover the most. So I want to show you which ones have been trading up and which sectors have been trading down so that you can look for stocks that are in those beat up sectors so that you'll know which one they have the most recovery to do. So we're going to go through the sectors, what they've looked like for the first quarter and for the end of the year. I'm going to do a little historical on what sectors are doing right now. Going to give you an update on inflation, about what it's like. At that point, we will have the new CPI numbers out. The new CPI numbers will be out that Wednesday before. So we'll go through that and talk about what inflation looks like and how markets are performing in that environment. I'm also going to give you an update on stock splits. We got some major stock splits coming up. So I want to kind of give you a refresher on stock splits and also tell you about those stock splits that are coming up and answer your questions on how you should take advantage of those upcoming stock splits. I shared a couple of them in the Stock Savvy sessions, but there's others that there's rumblings about that's coming. We're also going to talk about stock buyback and tender offers. Stock buybacks and tender offers. I know you've heard of those terms. And when you hear that a company is announcing that, you see their stock trades erratically. Sometimes they go up, sometimes they go down. And I'll tell you what makes them trade that way, how they trade based on these words and what makes them trade that way and what you should do in that case. So get ready for that. Then I'll also tell you about my quick money trading group. And those of you that have completed the class are in the graduates group, you're eligible to join the quick money trading group. And that's a group where I work with my traders every day and I'm coaching and teaching on some advanced market trading, how we can make money the long and short way, how we're doing monthly dividends and all types of things to get you money in your account every month, every week actually, but every month. So that's going to come up. So mark your calendars. You'll see an announcement from me very soon on that. So with that, any questions? Let's see. I don't see any questions from you. So I'm going to say just post your questions here if they come up later. Carolyn Williams with Money Reverse. It is so good to see you. Now, if we have high volatility tomorrow, I will come on board tomorrow as well. Thursday, Tuesday, Wednesday, and Thursday are my days, but I'm going to look at my calendar. I have a busy client day tomorrow. So it'll probably be in the evening again. I have some openings in the evening. So I'll come on later tomorrow also, if we have high volatility tomorrow, which I'm sure we will. We're going to have high volatility like this probably all year. Inflation's not going to go away. It's not going to just go away in a month. It's not going to go away in a month. So we're going to probably be trading very volatile like this every year. So those in the graduates group, you'll get an update from me. Those that have not taken my stock class, I will be live here again on my Money Reverse YouTube and Money Reverse Facebook page. Tomorrow will be the last day that I'll do that. Then I'll go back to doing it exclusively because I'm giving you guys, those that haven't taken the class, the opportunity to know that you can be a part of this group that gets these updates on a regular basis by joining the next upcoming 21 days to stock market investing. There's registration ends this coming Sunday, Mother's Day. So get your registration in. I'd love to have you in class. I don't want you to miss it. I will teach this again later in the year in the November timeframe. So October, November timeframe. So I don't want you to miss the summer months if this is something that you've had on your heart to do. I don't want you to miss this recovery time. So now's the time to really learn. And if you invest in yourself, I promise you, you'll make this $2,500 back real quick. Most of my students take a 4-month payment plan and they let me know they have made their $2,500 back before they finish paying for the course. That's just why do you do that, Carolyn? Because I want people to take the course. So I'd love to have you in the upcoming class. And for all you graduates, post your questions here and I will get back with you as soon as I can. Have a good one, everybody. And I will see you tomorrow if we have the VIX over 25, which I'm sure it will be. It's been over 25 for the last 3 months. So I'll see you tomorrow. Bye.